When you think about a company's value, what comes to mind? Skyscrapers, shiny factories, fleets of trucks? You're not alone. Many people instinctively think of physical assets. But here's the twist. On Wall Street, those tangible items barely scratch the surface. Good day, aspiring investors. Welcome to the Deep Beat channel, turning complex finance into music and wisdom for millennial investors. Have you ever wondered how a single company could be worth more than entire countries? What if I told you that Apple's value exceeds the GDP of nations like Italy or Canada? The secret lies in a powerful financial metric used by news channels, Wall Street analysts, and investors worldwide. It's called market capitalization, or market cap for short. Today we're diving deep into what market cap really means, why it's so widely used, and how it helps investors measure the size and value of companies in the stock market. I've even turned this concept into a song. If you haven't watched it yet, head over to my YouTube channel and check it out for a quick understanding of the concept.
From small to mid to giants, you see, it shows how strong that firm might be.
When you think about a company's value, what comes to mind? Skyscrapers, shiny factories, fleets of trucks? You're not alone. Many people instinctively think of physical assets. But here's the twist. On Wall Street, those tangible items barely scratch the surface. The true value of a business often lies in something far less visible, its future. Professional investors turn to methods like the discounted cash flow, DCF model, which estimates a company's worth based on the cash it's expected to generate in the years ahead. This forward-looking approach reveals a business's intrinsic value, the real, grounded measure of what it's truly worth. But if intrinsic value is the gold standard, then where does market capitalization come in? Why is it the headline number you see on every financial news report and stock profile is a quick, widely used indicator of a company's size in the stock market? It's calculated by multiplying a company's share price by its total number of outstanding shares. It doesn't tell you what a company is really worth, but it tells you what the market thinks it's worth right now. And that perception, it matters. It's why companies like Apple or Nvidia are valued in the trillions, and why market cap is one of the most talked about metrics in investing today. It's a straightforward way to gauge the size and scale of a business in the market. For example, if you're curious about how large companies like Nvidia or Apple are, market cap provides the answer. Apple's market cap is $3.45 trillion, reflecting the combined value of all its outstanding shares. You can easily find this information by searching Google, but for more comprehensive data, visit Yahoo Finance. On the summary page, you'll see Apple's market cap alongside its stock price of $229 per share. To calculate the total market cap, you'd multiply the stock price by the total number of shares outstanding, 15.04 billion shares, which you can find on the statistics page. Stocks are commonly classified based on their market capitalization, which helps investors gauge a company's size, risk level, and growth potential. Traditionally, stocks have been grouped into three primary categories. At the top, we have large cap stocks, which include well-established, financially stable companies with a market cap of $10 billion or more. These blue-chip stocks are known for their consistent returns and resilience in various market conditions, making them an ideal choice for conservative investors and beginners looking for lower-risk opportunities. Next are mid-cap stocks, which fall within the $2 billion to $10 billion range. These companies are in their growth phase, balancing elements of both stability and expansion. While they carry moderate risk, they offer investors the potential for higher returns than large caps, while still maintaining a degree of reliability. On the higher risk end of the spectrum are small cap stocks with market capitalizations between $300 million and $2 billion. These companies often have high growth potential but are also more volatile, making them a better fit for aggressive investors willing to embrace risk in pursuit of substantial returns. In recent years, two additional categories have been added to this traditional classification system: Mega cap stocks, with a market capitalization of over $200 billion, represent the largest and most dominant corporations in the market, such as Apple and Microsoft. On the other hand, microcap stocks, with market caps below $300 million, include smaller, often emerging companies that can offer high reward potential but come with even greater risk. Despite its limitations, market cap remains one of the most widely used valuation metrics because it is simple to calculate and straightforward to communicate. Unlike intrinsic value, which requires deeper analysis and financial modeling, market cap provides a quick and accessible way for investors to compare companies and assess their relative size within the market. However, did you know that its application extends beyond merely measuring the size of companies? Market cap also measures the scale of stock exchanges and entire asset classes. For instance, as of January 2025, the New York Stock Exchange, NYSE, holds a total market cap of $28.33 trillion, while the Nasdaq stands at $26.62 trillion, a testament to its broad applications in finance. As of March 2025, the United States accounts for approximately $52 trillion in market capitalization, representing a substantial portion of the global equity markets. In contrast, the total global stock market capitalization stands at around $69 trillion, indicating that U.S. equities dominate a significant share of the global market. Meanwhile, Bitcoin's market capitalization is approximately $2.2 trillion, underscoring its relatively modest size compared to traditional asset classes. By analyzing the market capitalization of each asset, investors can better assess the relative scale and potential opportunity within different segments of the financial markets. Measurement of market cap is even beyond company size and stock exchange size. The legendary investor Warren Buffett uses it as an important tool to predict market trends. It is called the Buffett indicator, which compares the total market cap of a country's stock market to its gross domestic product, GDP, offering invaluable insights for forecasting. For example, the US stock market currently has a market cap that is nearly 209% of its $29 trillion GDP, suggesting it is significantly overvalued. Historically, this indicator has been accurate in predicting stock market crashes. In 2000, the stock market cap to GDP ratio hit 134% before the dot-com crash. In 2008, it reached 104% before the financial crisis. Grasping the concept of market cap is essential for anyone looking to become a smarter, more informed investor. For beginners, mastering this fundamental metric unlocks three key advantages, helping them navigate the stock market with greater confidence and clarity. 1. Tailored investment choices. Based on your risk tolerance and preferences, you can make informed decisions about whether to invest in mega cap, large cap, or small cap stocks. For conservative and beginner investors, mega cap and large cap stocks are ideal due to their stability, while small cap and micro cap stocks suit those with a higher risk tolerance seeking greater returns. 2. Effective diversification. When diversifying your stock investments globally, understanding market cap allows you to allocate your portfolio strategically. For instance, you might choose to allocate around 60% of your investments to US stocks, which dominate the global market, and then distribute the remainder to stocks from other countries based on their respective market cap sizes. Third market trend. Forecasting. By observing the Buffett indicator, which compares the total market cap of a country's stock market to its GDP, you can forecast market trends and assess the likelihood of a potential crash. This proven tool provides helpful advice for anticipating market conditions. Market cap is a fantastic starting point for understanding a company's size and the market's current opinion of it. It's simple to find and compare. However, remember it's like a snapshot. It shows the market's current mood, not necessarily the deep, underlying true worth of a business. For that, you'd need to look deeper. If you want to dive deeper beyond the market cap concept, tune into my podcast video, where I break down why market cap alone isn't enough to value stocks and businesses. Thanks for watching and see you next time.